The US Federal Reserve has just said that the Polygon blockchain is going to be massive, and the LUSD stablecoin has depegged over 99%. What does this mean for the Lena DeFi ecosystem? This is your Altcoin Buzz News. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. We just made a great call in Altcoin Buzz Alpha. Just earlier this week, we made profits on a great flip that was 20 times the subscription amount. Don't miss out, join our Patreon or YouTube membership now. Check the description for more details. According to Santiment, Bitcoin's non-whale wallets, defined as addresses with under 100 Bitcoin, have climbed to new all-time high levels, now owning 41.1% of the available supply. Meanwhile, whales with 100 to 100,000 Bitcoin own 55.5% of the supply, their lowest amount held since May. We just posted a video today on our Altcoin Buzz trading channel where Randy has gone over key levels that you need to watch out for on Bitcoin, as well as 3 other altcoins that are moving a lot right now. Make sure to check that video out, linked down below. Argentina has grappled with hyperinflation for several decades due to failed policies that have led to budget deficits. As time marches on, the likelihood of Argentina, home to 47 million people, are facing a full-scale currency collapse. But what are the prospects for increased adoption of Bitcoin given its outstanding track record when pricing the local Argentine peso currency? Throughout history, the Argentine government has frequently resorted to inflating the money supply through bank deposits or government bonds. Notably, Argentina's aggregate money supply M1, comprising of currency, demand deposits, and other checkable deposits, have surged from 2.81 trillion pesos in July 2019 to a staggering 10.66 trillion pesos, marking a 277% increase over 3 years. Bitcoin's price on domestic exchanges has soared to 19.6 million Argentine pesos, up from 14.2 million when Bitcoin reached its all-time high in United States dollars in November of 2021. This means that despite a 61.5% drop from $69,000, investors in Argentina have still managed to accrue gains of 38% when measured in their local currency. However, one may encounter a different result when consulting Google or CoinMarketCap for Bitcoin's price in pesos. However, manipulating the official foreign exchange rate, as seen in Argentina's case, ultimately contributes to inflation and impedes economic growth. This leads to varying exchange rates depending on the market in which the transaction occurs and whether or not it involves the government and official banks. According to Bitso exchange prices in Argentine pesos, Bitcoin has gained 150% over the last 2 years, ending on September 21st, moving from 7.84 million pesos to 16.6 million pesos. However, the accumulated official inflation rate during this period has exceeded 300%, making it incorrect to claim that Bitcoin has been a dependable store of value. Notably, those who opted for US dollars, whether in the traditional form or stablecoins, have seen their holdings increase by 297% during the same period, effectively matching the inflation rate. This analysis exclusively compares the 2-year period between September 2021 and September 2023. Nonetheless, the outcome is somewhat disappointing for Bitcoin proponents and is likely to favor the adoption of stablecoins in the region. On a positive note, investors have had the opportunity to learn about the advantages of self-custody and scarcity, given that the local currency has been decimated by its continuous inflating supply. DeFi protocol Linear Finance has reported an attack that has resulted in liquidity being drained in its Linear USD or LUSD token. It's the latest DeFi exploit in what's been a busy month for them so far. On September 21st, Linear Finance reported that it was subject to an attack that resulted in the draining of all LUSD liquidity on both PancakeSwap and Ascendex. The attacker was able to mint an unlimited supply of LAVE and subsequently traded the liquid asset to LUSD on the Linear exchange. They then sold the tokens on PancakeSwap and Ascendex decentralized exchanges. The team has halted all smart contracts and bridges on the protocol. The Linear team said they've engaged an industry-leading team to track the attackers and bring them to justice, saying wallets known to have taken part in the exploit have been shared with all major exchanges and authorities. Restoring the protocol and undoing the damage for our users will be our highest priority until the issue is fully resolved. The protocol supports cross-chain liquidity and synthetic asset trading. It has a collateralized debt pool that allows users to deposit collateral to mint Linear USD, which is then used to trade synthetic assets on the Linear exchange. The protocol is governed by the Linea token, which is used for voting and staking rewards. Furthermore, Linear Finance offers 2 main tokens, Linea, which is used for governance and staking, and LUSD, a stablecoin pegged to the US dollar, used to trade synthetic assets. According to DeFi Llama, Linear Finance's total value locked is around $8 million. Moreover, it doesn't appear to have tanked as a result of the DeFi exploit. The same cannot be said about the protocol's stablecoin. LUSD collapsed to zero when the stablecoin liquidity pools were drained. Remarkably, the protocol's Linea token appears to be unaffected by the DeFi exploit. Linea was trading flat on the day at just over 1 cent. The DeFi token has actually gained 3.5% over the past week, but remains down 96% from all-time highs. Jay Zhuang on X echoes my thoughts exactly, saying, "The incident with Linear Finance underscores the critical need for rigorous security audits in the DeFi space. Contract vulnerabilities are a growing concern for all stakeholders. While liquidations are paused and users are not at immediate risk, caution is advised. If DeFi is actually going to become the future of finance, we can't have as many hacks and exploits as we have going on right now. Hopefully this gets fixed soon." We've also just posted a video on the biggest crypto narrative for the next bull run in altcoin Gem, which I highly recommend checking out, link down below. One up-and-coming sector that I'm personally bullish on for the future is RWAs, or real-world assets, and the US Federal Reserve Bank has just shared an official working paper discussing in detail asset tokenization in RWAs, which can bring many benefits such as lowering investment thresholds, promoting standardization, improving liquidity, programmability, and adding new functions, as well as promoting lending. On that list, as Polygon co-founder Sandeep writes, Ethereum is mentioned 12 times and Polygon 5 times as blockchains in which these tokenized assets would be on, which is huge for Polygon coming from the Federal Reserve and sure to be a big sector of crypto in the coming years. And also, Celo, a blockchain platform, is exploring migrating from a standalone blockchain to an Ethereum Layer 2 network. Originally, Celo had planned to utilize Optimism's OP Stack, a customizable toolkit similar to Polygon, but based on Optimism's technology. However, Sandeep, co-founder of Polygon Labs, has proposed an alternative solution to the Celo community. Sandeep suggests leveraging Polygon's Chain Development Kit, or CDK, an open source toolkit that enables the creation of customizable Layer 2 chains powered by zero-knowledge technology. According to the Polygon Labs co-founder, this strategy would allow Celo to leverage the benefits of being an Ethereum Layer 2 while preserving the characteristics that have contributed to its success. The proposal emphasizes several key advantages of adopting Polygon CDK. Firstly, it enables cross-chain collaboration by integrating with an ecosystem of Layer 2 solutions powered by zero-knowledge technology. Polygon CDK enhances compatibility with Ethereum by providing an environment equivalent to the Ethereum virtual machine. This alignment ensures a seamless transition for Celo, closely matching Ethereum's technical infrastructure and tooling. Furthermore, according to Sandeep, deploying the protocol's CDK offers increased security for Celo. It allows Celo to leverage Ethereum's proven consensus layer while incorporating the security benefits of zero-knowledge proofs. Regarding fees and scalability, Celo can benefit from low fees by utilizing the ZK EVM Validium architecture and off-chain data availability supported by Polygon CDK. These features contribute to cost-efficient transactions while enabling scalability for Celo's network. Moreover, according to Sandeep, Celo gains access to unified Layer 2 economy by becoming a part of the Polygon ecosystem by combining Ethereum's mainnet with Polygon's ecosystem. This integration creates a seamless experience for developers and users, facilitating interaction with both networks. With zero-knowledge technology, Celo users can enjoy near-instant withdrawals, faster finality times, and instant cross-chain interactivity. According to the blog post, these features enhance the speed, efficiency, and security of transactions, ultimately improving the user experience. It's important to note that no final decision has been made at this stage, and the proposal signifies the beginning of discussions between the Celo and Polygon communities, but it will be interesting to see if Celo does accept this idea. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.